2023, boys. 2023. This is the year. This is the year. This is it. This is the up into the biggest flash crash the market has not seen in a long time. We are breaking this year, but first we're going to break all-time highs. This year is going to be insane. Insane. Okay? And it's happening right now. Right now. We're going to be breaking this downtrend in the market, in my opinion, before the option expiration January 20th. This is going to break, and we're going to break above 410. Wherever we go, we go. And it's going to be on to the races. Off to the races. I think it did this for this long because it needs to be extremely coiled to the upside. Like it needs to continuously go up. I don't think it's going to be chopping around like it did this year. That's what it looks like it's doing so far. So we'll see as it continues. I don't want to talk about everything. There's literally 9 million things I can talk about here as to why I think it's going to go up. We're just trying to hit the bases and go with that going forward. Really needed this break. I'm sorry, but we really needed this break. I needed this break from the market and the nonsense once this happened, because I knew that this was going to happen. We literally talked, I'm pretty sure I mentioned it in my last video, how it could do something like this in the second half of December, because it was ready to go down here, and then it had this wicked move up, and that just and then it peaked and went straight down. Again, went down, bottomed, goes straight up, right? We literally bought calls at the open that day and the bottom print, and we sold it here, and now we're just waiting. I'm going to buy puts. I'm going to buy a straddle. We're going to buy puts and calls after the market makes an impulse wave today to the upside. I think we're going to go up into this again and fail, and we're going to have a violent sell-off on CPI and go straight up. Okay, and from there we're literally going to go straight up like an hour. I don't know how high we go into this. I don't know if we go up to here and then we chop and then we go up, how this is going to look, but we're going to rip so hard so fast. We're breaking this downtrend. There's just so much to say. So we had a gap down straight up on the CPI. We had a failure into straight up. Here we had a gap up down. So you can see how the pattern of the CPI and coming out of the bottom of the market is rolling over, so to speak. So you gap down, go straight up. You fail before the CPI, but go straight up. And then you gap up and go down. You see how it's like starting from the bottom, now we here, starting from the bottom, going to the top. And now the momentum is kind of peaked out here. So what kind of pattern would you end up seeing here on this CPI print? In my opinion, based on this and everything else, you'd get a gap down straight up like this again. Here, I wanted to see a much bigger move off the bottom. We just never got it. I was very disappointed seeing how much we chopped here for 5 to 6 days. I really wanted to see this rip out, and it didn't because it was most likely setting up for this. The reason why we fell off like this, the exact reason why we fell off like that, was that it's still behaving on a yearly candle basis. These moves that are happening in the market are based on what happened on COVID. This whole year is a reflexive move, a fractal, so to speak, of the COVID move. It's all one big throw the rock in the water and skip it, and the effect of it is after it's all off of the COVID move. And it's obeying based on yearly candles. So here it was ready to go lower, but then stabilized up. Here it was ready to go higher in October, November, but then stabilized down. And so now all that's left is up momentum. All that's left was down momentum. And we're going to break the high. So we're just still obeying yearly candles. And if we break this high, May, June, July-ish, if we break this high in this big euphoric type of top, I see us touching at least that 320 before September. So we would have another COVID-esque type move with the possibility of an overextension. It depends how far it would overextend. That would determine things, but it wouldn't matter because you'd be short anyway, and you'd kind of figure it out on the way there. This is going to break. We're in a rising rate environment that's going to stay high. The whole basis of this entire rally was 0% Fed funds for forever. It was free money. Now we're not there. So this is literally the unraveling of it taking 1 to 2 years of it playing out. People are so bearish. Sentiment is unbelievably bearish. Stocks have gotten murdered on a 20% market correction, which is unheard of. Unheard of. If you have a correction like this, 15% off the top, stocks like don't even realize they get hit. They're up like 300%, down 20, and people are like, okay, whatever, who cares? Like when you get a move like that and stocks are down 40, 50, 60, 70, 80%, you're not getting this. There's nowhere for stocks to go. there's a huge misinterpretation of what's actually going on here. But anyway, so this was going to break. So this is kind of like it wants to break, but it can't. And so you end up getting like a residual move of this getting blown out to the top side. Yeah, and I want to see like a lower wick. It depends. We're going to hit that. I want to see something like 270 to 310. But we could actually reach that. And down here, if we reach here, then the 2020 corrections in the 2020s is over. If we get down to the 180 to 210 range, I don't think that'll happen. I think that would happen in the later. So we'll see. That's talking about from a while from now. But what we want to talk about here is we're looking for the market to go up, retest this one more time, and fail sometime, I would say, in the first half of this day, 9 in the morning right now. And you're looking for a gap down into straight up. Again, so the pop, everyone's probably expecting a pop because we popped huge twice in a row. So people are probably actually buying more calls than puts. We've had the run up into it. This day here, the VIX got crushed with the market barely going up. That's the market digging its heels in. Okay, that's what happens when the market digs its heels in to go higher. But for the last year or two, every time it does that, it usually goes up briefly and then gets wrecked and then goes up afterwards. It's this weird effect that's never happened before. Every single time for 10 years before 2020, every time you get a day like this, where the VIX gets crushed and the market barely moves up, it's the representation of the market digging its heels in, and it's the bottom. There is no more downside. It's the bottom. But for the last year and a half, it hasn't been doing that. It kind of goes up for a day or a week and then makes a lower low and then might go up like the next week, month, whatever. So it's a very weird effect that it's going on here. Let's see. We have a gap still here. There's still a glitch trade on the Qs. 266. Dun dun dun. Dun dun dun. Still a glitch trade. The S&P hit it. S&P hit their glitch trade. There's still a pre-market low that hasn't been hit during the hours. This normally is a bearish candle. It represents it wants to go lower but physically can't. This is not a healthy candle. And so I would really like to see this actually pull back. Again, this spiked huge here, and then there was an air pocket here. This should not have happened if this was the bottom. And if we sell off huge on CPI, below that is my target. Around that. If it breaks below 379.46, what is that? Yeah, 45. That's where you're looking for the first big dick green candle on high volume. You're looking for a 15-minute candle, 30-minute candle, or hourly candle on super high volume at the start of Thursday morning of a reversal. So you're looking for like a long wick down and go straight up, or wherever it opens and it goes straight up if it gets low enough. That would be where I'd want to see it actually break. It doesn't have to, but it would make a lot of sense. You got the gap at like 374 here. 376 and change. Let's see that. Qs, so that would be about a 3% correction. 3% correction. So yeah. Why would I think that? Why do I think that? Because of how the VIX is moving with the market in doing this. The move here. Okay, so now you know that this is why the market did that, because it's a yearly candle thing, right? So it was ready to break it here. This is why I was so bullish in November, December. It was ready to break it here, but it did this, and this is what waves do in everything, indexes, stocks, everything, is that it sets up moves in accordance to a candle. So it did this based off of the yearly candle. It could do it for the monthly, the quarterly, whichever, but specifically, very, very important for the yearly candle to have done this. It stabilizes down for the future down wave. that we're coming. If the market was bullish through and through and we weren't going to correct when we go back up, it would not have done this. Very important. It would not have done this drop if we were just going to break this, go up, and we're done. Period. And you need to remember that, because when the market is at 460, 470, 490, 510, and the whole world is insanely bullish and everything is blowing to the roof, you're like, that doesn't mean nothing. Doesn't mean no. That's literally what it means. It's very easy for people to forget what's actually happening in the market based on what's actually happening in the market. And this is why it's very difficult for people to trade extreme moves in the market. So here, if you look at the MACD, you see how it touches the MACD here and it gaps up, but then gets rejected. That's not healthy. That is not healthy. That's not what you would want to see in a bullish wave. What you'd want to see is a blow off bottom like this, blow off bottom, and it goes down. And then when it touches it, it activates up. And then chop, 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 and then the secondary move, and it does something like that. That's not what it did here. Very, very irregular. That's not what you want to see. And when something like that happens in such an irregular wave, it usually means more volatility. So here, now you have a move where we bottomed, start of the year, we gap up, violent drop lower to help stabilize a lower wick. We got the lower print right off the bat. This is what we were expecting, volatility early on in January, just like this. We went higher for 2 days and then had a violent drop the third day. We specifically said this in all of December. Even before December, we were specifically talking about this exact fucking move, literally exactly. And we're looking for some sort of violent activation in the first couple of days of January to the upside. Literally exactly what we got. So the third day, we got the fourth day. Exactly what we got, insanely violent. So if it on a yearly candle basis, that's what you're looking for, that's what we got. So far, so good. Simple. So far, so good. Okay. But this is not clean. This is not a clean wave. And to see how perfectly straight that is, that's very hard to maintain. Unless this wave is going to hit 420 before it touches here and just go straight up, it's very, very hard to maintain this. What normally happens, the rule is that it goes up and exhausts itself somewhere in this region. So basically today, tomorrow, Friday, and has a very violent drop, which would constitute the Thursday drop. So what I'm looking for is some sort of a pop that goes up into here, retest this high, maybe break it briefly, but have a violent rejection. That's what I'm looking for today. If that happens, then I'll buy. I'm still buying the straddle calls and puts, but I'm still expecting the drop. You'd want to see the drop, and then you're really, the first hint of a reversal, you're looking to go long in everything, including the memes. The memes are going to be worth so much money if you catch it low. So yeah, you get the kickback. It may even retest this line right here, right? So you go positive, and then it retests the zero line, right? That's a long way down. For this to go down to the zero line, this has to drop down to like here. And then you get a print like that. So it would go up and then it would like come down, but it would have to do all of this in one day. That's pretty rough. That would be pretty rough. But again, I want to see this. This would be the completion of the pattern. The gap down, straight up, gap up, down. And then it's like the resetting of the wave. So if you just go wave one, wave two, you'd get, again, now the restructuring of the wave, the gap down, straight up. Do this. I don't know which way I want to do. I think this was a B wave, A, B, C. So we're just going to do the top here. And we got a perfect 50% retracement. They grinded on it the whole way. 38.05. Right? I had an alarm at 38.10 for this, since from here, and it didn't touch it this whole time, missed it there. So again, 38.10, like this is what I'm looking for. And another reason why is that UVXY got a trigger last night on January 10th, and the last time it had a trigger was December 14th, right here. So December 14th, and it's just going sideways and down, and now it just got a trigger for the first time. So what has it been doing? It's been going down. Got a trigger? What does that mean? Exactly. So the possibility is there. You have a massive bearish flag on a MACD pattern where it goes, this was the stabilizer up, and then it gets released, and it just kind of goes in free fall down, chop, 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 comes around and crosses over. When you cross over here in this type of pattern, if this flushes through and impulses through, this gets destroyed. Destroyed. This goes down to like 4 by next week. This would get annihilated if this actually cleanly impulses to the downside. What I think is going to happen is that it's going to impulse to the downside, maybe spike on the CPI initially, but then get rejected. Like that's something I'd want to see, where it's trying to go lower, but then gets rejected in the interim. And what that represents is the uptrend in UVXY or the downtrends in the market, however you want to see it, it doesn't matter, is it's reacting with this. Is that you can't have this insanely bullish wave and have it super push through, because there is so much down momentum in the market. And this is how it stabilizes the waves months out. So you're trying to push through and it says, I'm not having that. Boom, gets rejected. And how does that look? A very, very violent spike like this. Very, very violent spikes. So that's what we're looking for. So everything is kind of lining up for a gap down in the market and go straight up. Can it just go straight up? Sure, it could. I just don't think it will. Everything to me, like it's going up into the print. People think it's going to go up for the last 2 prints. There's a lot to it. There's just too much I just don't have off the top of my head. The 10-year, well, that's interesting. It's right on the 0 line. Touch the 0 line, activates, open red. That's interesting. And this goes into the 10-year print, right? So it activates, residual, and then activates. So I don't know if it gets hotter, colder tomorrow. I don't know. I don't care. But the following prints for the next 6 months should come down a lot. So this is just kind of like CPI is not coming down enough. I knew it. The Fed. And everyone sells off. Everyone buys their puts, and they get fucked, because that's not the bigger trend. The bigger trend is the market's going to rip higher. And you can see how this is the uptrend since 2020. And this was we've talked about this before. Insanely weird tight coil here. That's usually what happens at exhaustion waves. The failure, the kickback. We had this alarm down here and we just missed it. So if we break this, then I'm just going to get rid of this, because that would have satisfied it. And now we're coming down into this trend line. And if this breaks, it goes down to 3%. If this breaks, this goes down to 3% really fast, which means equities are going to rip really hard. So it all comes down to, do you think that we're going to be bouncing off of this? Or do you think that we're going to make a new higher high on the 10-year? The 2-year. 2-year got crushed the other week. Crushed. So broke out, tried going higher. So if you take it like this, tried going higher, and then failed, because the trend wasn't up. We'll see how this all plays out. What else am I going to talk about? The VIX. Again, we have 25.79. Yeah, 25.79 was the algo trigger back in here, where it was a magnet for literally like 5-6 months. It spiked specifically right to this 25.84 the other day. So that's another huge line you want to look at if we actually can get there. You have this happening. I mean, how many times can this happen? Like, it breaks this, spikes up, breaks this, spikes up, right? Another thing, VIX, very, very, very important. Everyone's like drawing this line out like this. It's very important, and it makes a lot of sense. I don't want to get too much into this. Okay, 2017, we had an unbelievably low volatility environment with the post-Trump, and it was a very irregular, should not really have happened type of move. See how weird it is compared to the rest of the VIX, right? It just kind of really blew off to the downside because we double bottomed off of the 1993 bottom. We spoke about this for so long since it literally happened, that this is actually a trigger for the VIX after 20 years of trading sideways, where the only place it can go is breaking the high of the VIX, which is, oh, look at that, 172. Yeah, 172 will eventually break. I don't think it'll break on this correction, but eventually it's going to break at 172. And I have ideas on what can cause that and stuff. But now that it got triggered, it created the most violent VIX move in history, which blew up XIV, right? XIV went. Right, that's what happened. It just looks so amazing. Oh my God. That's what happened on this, right? The VIX didn't spike that much, but it spiked a lot in one day because it's activating. And what ends up happening was it activated, but it had an overextended move to the downside before it went up. Okay, so the wave structure for this looks very, very shoulder, head, shoulder. It looks very symmetrical. One sine wave is a head and shoulders pattern. And now if it breaks it, you're like, oh, great, now we're breaking it. We're going to stay down here. Wrong. What this is it's an overextension to the downside. So when you have a nice pattern like this, when you break that, it's a fake out. This is a fuckery move that's going to be coming, which will be a huge rally in the market, but people won't know that. This is going to be a fuckery move, and what you're going to get is the reactivation of this, but worse. So, but worse. And what ends up why that ends up happening is that VIX move, you want to see, happened here. What is that? What is that? It's literally nothing. Like, look at that and that and that and that, right? What is that? Nothing. But when you have a violent, parabolic 2017 Bitcoin going insanity type of move, how do you stop that? By having it's like someone's running full speed and you like punch them really hard. Does it stop them? No, but it really hurts, and it has an after effect. That after effect is going to click back in after this breaks. And the reason why it's going to break and then reactivate is because of that, this overextension that happened before. And this is how waves work and everything plays out. And so we will see if that's the case, and we will play it accordingly and what it does and blah, 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 blah. But yeah, everyone's looking at this and everyone's, so what can happen is like it break this, it could like retest it and then fail, and everyone's like, oh yeah, and then the big move happens. And I'm pretty sure it's going to be breaking the 85 high on COVID. It's going to be insane. It's going to be insane. So anyway, yeah, I don't know. There's so much. Another thing is the quarterly candles is that now it's playing out and looking very, 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 very symmetrical, where you can see this is where Evergrande happened, and this is an overextension. It never should have happened, but it's so super coiled off of the COVID move. Everything is kind of just moving in relation to this. So coils out, this is actually a bearish move. This is actually a bullish move that's exploded up into the close. Now you're getting a nice rounded move. See how this is the one that makes a nice little smile here? That's what's going to happen. It goes like this, make a nice little smile. So I don't know if the crash is going to happen in Q2 or Q3. But if it doesn't happen in Q2, sure as fuck going to happen in Q3, especially if we break the high. This is the 90-year trend that goes up like this. We're going to get up there. When we pierce through it, this is going to cause decimation. Yeah. So this is nicey nice. This is a nice coiling. If you just look at it, you red, red, red. We were red half the time, and then we went green, right? It looks very, very nice. Very, very nice. Monthly, it'd be very nice if this closes at 420 up here. That'd look very symmetrical. Yeah, I think we broke this already. I already think we broke the 9. It's just working its way out from the trend, the coil. Blah, blah, blah. You can see how we spiked up. We have this like U effect. Here we had an upward bias and it went down. Yeah, I don't know. It's like, see how it spikes up and it goes down, coil, 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 and then it goes green. So technically this could be just ready to go, right? You get a nice little base off the 50, retrace, and it's ready to go, right? Or it fails and then the downtrend is in order, they're the boss, and it pushes down. But it's an exhaustion. What this is an exhaustion of the downtrend. It's not actually the market rallying. It's just an exhaustion of the downtrend. The positioning, it's the sentiment. It's literally like... It's literally... Again, this is another. There's just there's so many things that you could see. Do you see the DMI? Yeah, it's going down. It looks nicey nice, like it's about to pop off of this, right? And go up. Yes. Why is the DMI so flat? It represents the strength of the move. Why is that so flat? Why does it look like it's literally doing nothing as this goes up 20%? Why? Like it does this, and that happens. Cool. It went up. It went up. It went up. What is that? What is that? Right? And again, it's all a fractal. It's a residual move off of the COVID bottom. It's not actually going up. It's just like if this went up like this and then it went down to here, that move, oh my God, it's not working. That move here is not consequential to the bigger wave. It's just a rock skipping in the water. It's not actually going up. It's just the reflexive moves off that. You get it? You get it? And then if you take that into consideration, you just look at it, how it's moving extremely coiledly and consistently. What does that look like it's doing? What does that look like it's doing? That it's been basing since October and we've gone literally nowhere. And it looks like it's about to go up. Yeah, it does look like it's about to go up because it's about to go up. Because it's about to go up. This looks like it wants to go lower, but it physically can't. You ever look at MACD waves to the downside that are actually bullish? It's very hard to continuously oscillate below the line, below the zero line. Waves like to move like this. Goes up, pushes down, and then goes right back up. And we did it here, push it down, and now it goes back up. It just took fucking forever. And that's just a function of the bigger wave cycle. The down move has to stabilize before it goes up. There's a lot of things people don't see, people don't know. If it gets rejected, this goes down to the zero line. If it doesn't get rejected, this does that. So the rejection is easy to see. The rip is hard to see. Everyone is bearish. We hit the high here. Like there's too many things. We have the quarterly that we hit. Oh, we missed it. Oh, we hit it. Where are you? Are you? The monthly, we hit the monthly 50 and the top of August. Yeah, it just looks so good with the bearish bias. Pop, pop, pop. It wants to go higher, but it needs to rest. Yeah, it's so good. It's like I'm so confident that it's gonna hit 420 before February. It's gonna hit it within the next 2.5 weeks. What is that? It's only like 7%. That's what's insane about this. It's literally 7%. So yeah. Bitcoin, like Bitcoin's holding up, and then the memes. Can we even talk about the memes? Like Bitcoin doesn't literally drop like this and then go straight up. This is a blow off bottom into the top of 2017, and it's going to be going higher. Oh yeah. GameStop, MACD crossing, like Bed Bath and Beyond and AMC, everybody's starting to click right here. This was really, really toxic. The fact that the market, this was very, very bullish. When it clicked here, it was a very, very bullish wave. As soon as that day happened, I got very, very aggravated because this should not have happened. It should not have broken the uptrend at all. And as soon as it broke it right there, I knew that some shit was about to happen. It was right on the breakout point. So that shouldn't have happened. And yeah, then I stopped streaming because I just didn't want to sit here and watch the market do literally nothing for 3 weeks. Then the Fed happened and the CPI. But what we did was we broke the low, so it's peak capitulation. And we hit the top up here. 15.94, 15.41. So it just hit support. And what you're going to get is, you're going to get this year should be the residual of this 20,000% move. Is it going to go up 20,000%? No, not even close, but it just needs to go up 1,000% and it goes up a shit ton, right? That's what will happen this year. You should get the residual of this. You got the consolidation year, and now you're going to get the residual year. But I think it should fail, and then it'll coincide with the market correction, et cetera, et cetera. The AMC move, I had an alarm at 4.58. It was a possibility up when it was at like 7, 8, 9 or whatever, that it could get there in December. I was really hoping it wouldn't, but guess what? It did. But we are clear for takeoff on these waves here. This is non-trending negative move here. That means that this is pushing down and not actually flushing down. This is like it's pushing down to stabilize down because it's eventually going to go there. And this is how much energy it needed to push down because of how high it's going to go. That's pretty insane that it needed to do that for 5, almost 6 weeks. Pretty violently. Yeah, I just see everything kind of floating out. Everybody had a nice little run today. We actually bought GameStop at 17 today. We're probably going to sell it today and then pick it up on the drop on the CPI. So again, market's going to rip higher. This year is going to be fucking insane. If we get the rip higher into Q2, into Q3, we actually break all-time highs. We'll be setting up for this. It'll be meme insanity. Everything will go insane. Absolutely everything. And with that, you'll end up getting the breaking of a 15-year trend, whatever it is. You'll end up getting the breaking of this. So blow up top and then whoosh. Probably hit that somewhere. 300, overextend, some shit like that. But that's what I see. And you need to get the unraveling of the positions and the sentiment to get it. Because anybody who knows anything about anything knows that's what needs to happen. And people who don't know will have no fucking clue that it's even possible. Yeah. I'm excited. So look for the drop on CPI if you get it, and look for the first reversal minute and the first 15, 30-minute or hourly candle. If it's a high volume, very violent looking move, whoosh is happening. Whoosh is happening. Whoosh is happening. Okay? Very, very annoying. Very unfortunate that we had to waste 3 weeks doing absolutely fucking nothing. But yeah, got filled. But there it is. Okay, where are we at? 392. We're right here. Yeah, so I want to see some sort of failure, some sort of like volatility click today. We could even end up whatever. You just want to see something click because the UV trigger happened last night. So if it's going to take a little bit of a lag, you want to see it click, which would represent the market getting kicked back tomorrow because it's clicking into the next tomorrow morning, right? So that, I guess that's all I have to say. I don't want to like get too crazy over everything. We bought Bed Bath & Beyond literally at 1.38 and we sold it yesterday because it was right at a pivot point right here at like 2. Was it 245 right here? And I didn't want to have this drop because if it dropped, it would have went all the way back down to here. But we got in GameStop, so it's whatever. Freaking annoying though. Yeah, and everybody looks rearing and ready to go. All right, go look out there. I am so excited for 2023. You have no fucking idea. This is going to separate the men from the boys. This is going to be the most insane year to the upside and the downside. We catch this downside. Holy fuck. I don't even need to make this much money. I'm making this money, trying to make this money for like the world. I want to like do shit with the world. This thing is going to be insane to be able to catch this correction if all of this plays out. Talking tens, if not hundreds of millions of dollars. I'm expecting hundreds of millions. So get your money while you can. Make sure you're on the right side of the trade. If you're bearish, you're fucked. There's no way around. If you're bearish, if you got 350 by February's March, you're fucked. You're fucked. You really better take care of your positioning now because we're going up. We're going up. We're going up. All right, GG's. This is me starting. I should be starting to stream now because the market finally figured out its bullshit. And I just wasn't going to sit here and watch this every day. Oh my god. This is so tough to watch. Oh my god. All right, guys. I am fucking excited. I'll see you on the other side. Peace.